starting in a moment. Okay. So yesterday was an interesting day. Fed announcement, of course, Apple and Facebook after hours, and everything was happy. All of a sudden, markets are down a bit. Maybe markets are getting a little tired here. Interesting part about it is that for me, as I'm looking at the charts, especially at the end of the day, was this continuation pattern up at the top here. And this continuation pattern is one in which, prices have made a move. And in this case, and it did come down to fill that gap over there. Didn't get down to the close. It just touched the top of that bar there where buyers came in. And, the continuation pattern is one in which you've already made a move and you get what I call a correction bar. And the correction bar takes out the low of at least one, if not two bars, and it forms a bottoming tail bar and comes up. Now, to trigger the long, it has to trade above the high of that bar, which at the moment it's not doing. It's I'm not sure if this bar here is an overnight bar or not. In any event, when the market opens, right, during regular trading hours, it's got to trade above the high of that bar. That's your entry. Stop is below the low. This is new all-time highs, so it should continue to move up. Now, it's up. If we count this as, the first up week, it's up, going into 4 weeks in a row. And what we have is a slowing momentum bar. It was a 10-second flash down there. Okay. Paul, the reasons why something happens when you look at a chart, I don't say it's not worth knowing, but what I found to be of more value over the years is not to think too much. When someone asks about the put call ratio and are they selling calls or what they're buying, just look at what the chart says and then see what happens. So we'll see if this can take out this high here today and whether this can continue. The fact is here, the hourly trend is up, the weekly trend is up. I should say the weekly trend, the daily trend, they're all up. So we give the benefit of the doubt to any nuances that might be going on. Like we looked at the sentiment yesterday, which is up at an extreme. And so when sentiment is where it is, and I say accidents tend to happen. So all of a sudden, certain stocks start to fall from the sky, which, for whatever reason. But those wrong way option traders can't be on the right side for very long historically. That's a fact. Now, new all-time highs and all of that aside, this is a slowing momentum candle. So we'll see where it ends up today. But that's a relatively small range candle body compared to the turn. Right? So this was your historical typical hook buy pattern. It was a big bar. Big range bar there, and then the range contracted. We talked about that in the MT Live about range contractions, and that was the start of a move. But now range contraction after a move is going on also communicates that buyers and sellers are reaching some agreement, right? Some about the extent of the move, and the momentum begins to stall. And then when momentum stalls, the question becomes, well, does it correct sideways? Does it chop down? Or does today turn into a big, ugly red bar that closes below the low that at that point in time, we're going to be looking for lower prices tomorrow. And then, of course, bar by bar analysis, that's our method. So right now, we opening up here, 303, down a little bit, neutral. What's going to get the market going today? I'm not sure. We just look at what happens, as the market opens up and look at the trading range and see. But look, we've got this support line that was there from yesterday. Obviously, That's resistance, the high of the day. And maybe it's an inside day. We never know how a day's going to end. But if we did that, right, it would make it pretty easy. But what we do is we mark off our reference points and then see how things develop. Even on a look on a smaller time frame, we get a little bit more detail, and we can see the little W bottom down there, the run, and well, wide range bar and consolidation. That's how things went out toward the end of the day there. So Qs, let's get rid of the squiggly lines. There, Qs, same story. How much resistance is actually there? There really shouldn't be much. But there's our lines in the sand. Let's make our line green. And so we've got a little trading range going on. Same story. It's not your textbook correction bar, but similar idea. Push down, push back up, green candle. That didn't look so certain. Remember when we went long, the Russell, some of us in toward the end of the day there, and as it was chopping around, we could take a look at that. But a lot of things on the 5-minute chart appeared to be bottoming, but there was a lot of jiggles going on there. And, we wrote it up decent, for a decent trade for what was available in the moment. Anyway, the Russell's getting up to the top of the range here. So when we talk about slowing momentum, it makes perfect sense. It's been in this range now for several months. Bottom of the range, up at the top of the range. Maybe it's got a little bit more juice left in it to get there, but same bottoming tail kind of a bar right there. So if it can get some legs today, maybe it gets up to the top of the range. We'll see. But if it takes out yesterday's low, well, there's some supports not too far away. So it's unlikely, I think, that we're going to have some kind of momentum move to the downside either. Let's look at the futures. And you can see the inside day that's going on here. Right? Buyers stepped aside there all of a sudden on there's some news there at 5 o'clock in the morning, and things are just chopping around. So let's just drag that up. Let's drag this up. And we've got our reference points, and it's got a trading range at this point in time within an uptrend. Weekly up 4 weeks in a row, new highs. So normal momentum to begin to stall with, the wrong way option traders up there, up into the red zone, backed off a little bit and getting a little apprehensive about where the market is at this point, and continue to notice the breadth, folks. Right? This market going up, making new all-time highs. Probably at some point when the correction starts, somebody's going to point this out to you and say, oh, it was going up on anemic breath. Well, in a sense, yes, that's valuable information. But if you are an active investor and trader, you know what you're doing. Yes, it's a piece of information that tells us what's going on in here. But with the proper money management, stop placement and such, you're not going to be blindsided. You know what's going on. We know that the sentiment has reached a historical extreme. We know that the breadth is lousy on this advance, and those are warning signs. All right, NQs, same story. They're up a little bit here. Inside day, still support down here. That high is resistance and nothing up above. Got a bottoming pattern here on the 5-minute chart. And there's a void. It's somewhat similar to what we were looking at in the Russell futures yesterday afternoon in the green room. And where we went long, it was a bottoming pattern. And if you remember, I said, I'm picking this one because it's the one that fell the hardest. And it did outperform the others. And then later on, the others started to do a little bit better. But sometimes what was the weakest is the one that will return the best because it's got what we call a price void. So this is a sharp movement in price and then some correction in time, which makes this void up above that it can rally back into. So we'll see where this goes. The Dow inside so far. We see the same patterns everywhere, right? Right? Like it popped up, it went sideways, and then here at 5 o'clock in the morning, I don't know, maybe Europe sold off. It came down, and now they're stabilizing for the moment here. But we've got our lines in the sand. Right? Makes it relatively easy to say, hey, if it gets above here, have a long bias. If it gets below here, have a day trading short bias. Here's our Russell, right? Kind of just chopping around here. Maybe no long-term China deal. Who knows, Clint? They're like, they go back and forth like a woman in menopause. Keep your mouth shut, and hopefully it doesn't become, worse than it is. So trading range here in the Russell, chopping back and forth. We'll see which way it goes. All right, same story with the move down and stabilization and so on. Oil. Wow. I mean, I'm saying that because of the ETFs. They just can't get going. Even when oil makes this little run, now it's pulling back the support here. You can see it's chopping to the downside, but where is XLE? And the others maybe don't even look as good as that. But yesterday they came in pretty hard, as oil began to come in. So I don't know if these things are still, it's questionable. I know ideally they would have gotten a little further up here before creating a wide range bar like that. But maybe they are in a bottoming process down here looking at the weekly chart. Bonds are up, and they're up decent amount, which we know isn't good for equity. So we have to be suspicious of whether the upside is possible, as long as bonds are showing some strength from the support area where they rallied from the last time. Right? Again, guys, I like to point out, just you have to simply look to the left to see where the buyers are and where the sellers are. There's no fib lines on here. There's no Ichimoku clouds. There's no stochastics. There's no ultimate indicators. You just simply look to where there was a prior swing low, a prior swing high, and then see what the result is there. And as we see, it came down here and buyers stepped up again. Gold had getting improvement here, and this is what we've been looking for. Like it suffered as the market had its move to the upside, and now as the market seems to be weakening a little bit, I like the way this looks, right? Because of the weekly chart. We've been talking about this weekly chart now for about a month, looking for prices to come down into this area. And I think it's time. Wait maybe a little longer today, but it's not going to take off. I think it's time to initiate a position here in gold with a reasonably wider stop, since you've got this chop up here. And maybe it's time, with the markets up near the top of the trading ranges and some of them, and the inverted movements between gold and bonds and when equities, maybe we're going to see somewhat of a corrective action over the next few weeks, and gold will move up. So that's something to consider. Let's look at what silver's doing. Right, it's improving too. Remember this day where it popped up and it had that big down. Well, not big. It doesn't look so big now, but it gave up all of its gains. And it's I like gold better than silver with this weekly chart, but it should go up with it. Lastly, the transports that we always take a look at, and they had a bad day yesterday, went up at the top of the trading range. Right. It's what typically happens. Look to the left, right? If you're buying this at the top of a trading range, you desperately need to take Master Trader Swing Trading course, right? Or at least ask those questions in an MT Live if you're buying this move to the top of the trading range, right? Tesla, I'll leave that to Dan. Someone asking in chat room, Sebastian, saying, why you don't use 20 and 50 MA on higher time frame? I usually do, Sebastian, on my daily charts. I'll have a 20, a 50, and a 200. Depending, sometimes I take them off just for clarity in these pre-market reviews. Because, someone you look at moving averages and they are subjective as support and resistance. So I like to, reinforce the simplicity. Not that knowing we're at 200 period moving averages on the spiders or the S&P 500, that makes perfect sense because everybody's watching it. So knowing that point makes sense. So there you go. Here's the S&P. It is 9:17. I'm right on time. It's all yours, Dan.
All right, thanks. Good morning. Greg, if you can release the screen.
You should be able to, Dan, because you're a co-host. See if you can do it.
I thought I just tried. Let me try again. Okay, yeah, it says it'll stop. Okay. Got it. All right, all our opens are fine, so let's jump right to gappers here, because I go through all the opens the first hour, and that's part of our routine. And in fact, I was just working on it this morning early. Next week's MT Live is going to be about preparing market prep for day and swing trading and trading the first hour. And it's going to be our factory work of what we do every day. Starbucks 87. Bullish gap. Wow, remember we were shorting this thing on this breakdown? Beautiful. So bullish gap at the resistance, not tier 1, 61 bucks, gapping way the heck up here to resistance. Cree 45.50, a bearish gap. But now it's just kind of range bound. Twilio $100. Wow, that's a nice bearish gap. That's a 30-minute low candidate. Like 21 bucks. Wow. Wow. This is getting that's a third of your market value gone. That's crazy. ABMD 188. Okay, so this one's gapping just above. And it's coming in. If we can now get a double bottom at the open, then I like that. I have lift here in the upper right. I have W whiskey here getting clocked. Let me put ABMD on this window. WDC under 58 bucks, bearish gap, but no good pattern. Levi, it's not earnings, but there's a couple stocks here that one of our subscribers sent, and I liked them all, so I put them in my minder here. This would be a beautiful put selling candidate. Maybe even swing trade. It's a bottoming pattern, so and swimming upstream, so only for 1, 2, 3 days, whatever. He sent me this Hilton. Beautiful 1, 2, 3 on the weekly. After a little breakdown failure there, see that tail, which is this tail. I told him, I said, I'd like it to go sideways a little bit more here, just to burn off some steam. But that looks great. He gave me this, GMTX, a nice 1, 2, 3. That looks great, all time frames. He gave me Goodyear tire. Look at that. I love it when subscribers give me great stuff. So all of those are great watches. Back to gappers. Crocs had a nice earnings gap yesterday. I don't know what's going on today, but that's now a bearish gap. It's almost a bear island reversal. So that now is a call spread candidate over yesterday's high. And it's extended on the weekly, extended on the daily. KHC, gapping way up here, but no pattern. Wow, I remember this stock. I remember like 2 years ago, some subscriber sent me this guy's newsletter, and he said he was buying it, and while it was crashing here at around 75 bucks, and they never take stops. So can you imagine buying that at 75 and you still own that? That's what I call malpractice. Another subscriber sent me this one. it's in a trading range on the daily. The weekly is up 5 weeks at major resistance, but look at this beautiful monthly. That's a big old W bottom. I don't think that tail's real. But that is a W pattern. See, so ideally you want to get on these W's when you get a potent reversal on support, because then you're getting in on the basement floor. And that would have been over this bar's high. That would have been a no-brainer. Greg, what was that double bottom I mentioned yesterday? Oh, crowd. CRWD. Look, we have this one as a W bottom watch. And back to boots, 39 and change. That's a nice gapper. Gapping right over resistance. I like that. That's going in a window. But that's step one, right? Step two is they got to set up in the first half hour. And I can very quickly in the first 5 minutes, if the gap gets negated, big ugly red bar, I'll just delete it. Derna, this was an M top, but in an uptrend, daily, weekly. Now it's gapping over all this. Wow, the monthly, it's gapping up there. It's a bullish gap, but too big for me. This is just leftover from yesterday, GE dog. Let's keep an eye on that. See if we can get an entry. TPX, 85 bucks, bullish gap. Look, do you remember our MT live on flags? This is a bull flag. Look, your flagpole goes from here to here, 30-degree angle, channel retracement, and then you got to find your entry. If it weren't gapping, my entry would be over that red bar. And then, you're off to the races. You got a bullish weekly, bullish monthly, but I'm not chasing that big gap. AMT 220, that's gapping in a downtrend. BMY, that's very volatile pre-market. I'm not messing with that. Charlie India is too extended and also very whippy. When I trade these gappers, I want a very clean pre-market. And that is not clean right there. Duncan 7650, way the heck up here, but there's no pattern. Flowers, not much volume, but that's a controlled, nasty downtrend. It would have to, it would have to get over this thing to interest me. Mighty Mo had earnings. No pattern. Siri, it's a mess. UBS, it's an ADR and it's a mess. You're gone. Let's watch this thing. Whiskey getting clocked here 20%. It went all the way down to 80 bucks. So I like trading things that I like them more when they're fluid oversold. But let's keep an eye on it and see what it does. Because when you get big old gaps like that, they're good put selling candidates with the premium spiking. But we just got to wait till we have more evidence of bottoming. MGM had earnings 29 bucks. It could go 29, 30, 50, but it's slop. Met, slop. Lift. Lift 45.80, 45.84. Yeah. Yeah, I put him in the upper right here. That could be a 30-minute high trade. Etsy, 47 bucks. That's a bearish gap way down here. The monthly has room to go lower. Triple D, 834. That's a mess. Wow, I remember when that thing was 90 bucks. All right, here's our two heavyweights. 247, no pattern. Look on the 15-minute chart. That's a bullish gap, but resistance, support. And there's nothing to do there. Facebook, we were talking about into the close, and I like this big reverse head and shoulder. So my bet was on the upside on this. And that's just because of the chart, not because of any other reason at all. 197. It, looks higher, and we just got to watch it and get an entry. TPX we looked at. Twitter, it's not earnings. The gap down was earnings, but it's all over the news that they stopped political ads. And that got Trump in a tizzy. Estee Lauder 180. Ooh, it's not gapping under this, but it's still a bearish gap. MPC, it's too extended, nothing to do there. Clorox, that's a bottoming pattern and a mess. I got no interest. Crust, this one I did put back on my list yesterday. I don't know if it was earnings today or what, but it finally is going. HLF, I saw this yesterday and I want to watch it on a pullback. Price void on the weekly up to 50 bucks. So that's staying on my list. This was on my short list from yesterday. Bearish gap down. Has room to fall on the weekly. TTC is on my long list. Wide range bar breakout. Daily, weekly, monthly. See lift up here coming in already. Ollie North. Still nothing. You're gone. Roku. That was relative strength the last couple days. So we have a put spread on that for Friday. Let's see if Uber can get a bid here on the heels of Lyft. And Beyond is still a dog. All right, done with all those gappers. Taking a look at our opens. We have a covered call in the video. And the 202.50s. So, we'll be in a position to roll those for next week. TTC, I gave, no, not TTC. What is it? It was VIPs. I gave over 12 bucks. It hasn't triggered yet, so that's good. And PPG I gave yesterday into the close over today's high. So that hasn't triggered. All right, look at whiskey here. And just for the fun of it, I want to see how jacked up the $80 puts are for tomorrow. Well, they're selling at the open here, so I'm sidelined. $80 puts for tomorrow, 50 by 95. And that's still $8 is 10% out of the money. Isn't that amazing? I'm obviously not doing it. I just, like getting a feel for how juicy they are. Boot. And see how that came in hard? So that's an example of it failing my part 2 of my gap trades. I need a compelling gap setup, and then I need intraday setup. So now it's 9:30. It's 9:31. I've already lost total interest in Boot. He's gone. So McGraw, would it be safe